Thank you so much for your time today, Nkem. Before we get into activity for next week, though, let's find out. I'd like to know how this week fared out for you. What were your key highlights for this week?
Hi, Ken. Good afternoon. Market was relatively quiet this week. There was moderate activity. In the almost space, we saw buying activity as offshore players look to deploy idle cash. We also saw banks also buying as the market opened liquid. But this happened through Monday to Wednesday. We saw the trend reverse on Thursday as investors took advantage of lower yields in the market to take profit in anticipation of the CRR debit that was expected and the FX little auction that's to hold today. So that typically would lead to a tighter market and uptick in yields. On the NTG space, there was buy-side activity, but it was tapered due to lack of supply. In the bond market, it was mixed sentiment with a bearish tilt as market players basically anticipated that there would be an increase in sales of the bond auction that held on Wednesday, which we did see. The DMO offered 60 billion in equal proportions across the 5-year, 15-year, and 30-year benchmark paper. We saw that auction was oversold, and it was also oversubscribed by 600%. We saw rates go up on 2 of the tenors, and on the 2037, we saw rates decline. So that was really the key highlights of the week, the bond auction. So the DMO basically took a lot more than they had offered, and that led into Thursday where we saw more bearish sentiments there. We saw people take profit on their auction winnings, and we saw people also sell off in anticipation of increased supply.
All right, then, but let's look at what played out at the FX retail auction today. What were the sentiments like?
Well, let's start that the CBN reopened the wholesale auction this week, and we started on Monday with a special wholesale auction where they sold 72 million of the 100 million that they typically would sell. So because over the last 2 months there hasn't been any wholesale auction, there's been very little supply in the FX market. What we saw this week was that the CBN coming to the market basically gave the market assurance that they are now ready to meet demand and support economic growth. So there was more liquidity than normal, but not as much as it normally is. So that has actually sent positive sentiment into the market. People are now more sure about possibility of more stability in the market, and that would reduce pressure on the naira, especially if this trend continues. It's going into next week, the CBN continues the auction.
All right, we saw another uptick in inflation, and this time around for the 8th consecutive time. And I would like to know what this would mean for sentiment in the fixed income and FX space.
Okay, so headline inflation came out at 12.34% from 12.26%. Has largely been priced in by the market due to the impact of the COVID-19 on food movement and the fact that the borders have been closed. So it's been largely priced in. We saw that inflation was driven mainly by an uptick in food inflation. So the market is largely priced this in. We didn't see much of a reaction in that space. However, given the fact that the DMO issued the 30-year bond at 12.6%, there are some school of thought that now leaning towards investing in longer tenor bills because that helps to take their investments from negative returns to more positive returns. So inflation figures, not much of a reaction. It's there. It's been largely pricing.
All right, but then let's look at liquidity and what can we expect going into next week?
The market was relatively liquid this week. We opened with high liquidity this week, and however, there was a bond auction that happened, and we sold about 295 billion. There was also a CRR debit that occurred on Thursday, that's yesterday, and one that happened this morning. So that would help. That has obviously reduced liquidity in the system, and the expectation of banks settling the retail FX debit today. So that would reduce liquidity, and we'll probably see money market rates inch up in that space. Going into next week, there is an almost maturity coming in, so that would help to keep balance to the market. It is a short trading week, so liquidity would most likely be moderate next week.